It's clear from the graph that they beat silver. It went down a lot, but it turned around in half an hour and went back up, and gold made back about half of what it lost. So, that was partly to blame. But again, the number of contracts that were dumped to bring the price down to this level would also trigger other automated sell signals. When certain levels are broken, black box trading algorithms that handle a lot of these funds will automatically trigger sell stops. That is what would have happened. A lot of people lost their jobs while they were sleeping. Some people knew what was going to happen, so they came in early and bought everything for a song. Some of the players who were looking forward to it probably got something out of it, but not all of it. Recent fluctuations in the precious metals markets have revealed flaws in the structure of the global monetary system. Investors who didn't know what was going on lost money when the price of precious metals fell overnight because of a large sale of paper contracts. At the same time, insiders quietly bought the dip. It looks more like coordination, an effort to reset emotions and get back control, than panic though. These kinds of changes usually mean that the real demand has gone over the fake supply. Even though silver is in an oversold position, which usually comes before big rebounds, both gold and silver are still in proven uptrends. Andy Schectman, CEO of Miles Franklin Precious Metals, says that this manipulation could be part of a bigger plan. American policymakers may be quietly re-evaluating the value of gold in order to weaken the dollar, boost manufacturing, and bring global trade back into balance. This is in line with current policy proposals like the Genius Act. As talks of debt relief through hard assets and gold-backed systems come back, the balance of monetary power is clearly shifting toward real wealth. Here are some parts of Andy Schectman's talk. Before we go on, please subscribe to our channel and turn on the bell icon to get updates right away. Enjoy the video, and thank you. Really not wanting the light to be shown upon gold at that level because they're still trying to accumulate it, or other entities, other banks that are getting margin, called looking at severe stress, and in the London market, trying to drive the paper price down to protect themselves, to cover their positions. We could pick a million reasons why it's happening. But to me, the why is less relevant, as is the how it happened. And in any of these instances, if any of these players wanted to do things legitimately, wouldn't have been done the way that it was done. It was done to rattle the market. And maybe it was to, the retail investor over the last several weeks. I was just in Aruba for 8 days. I never saw the ocean for more than 30 minutes because we were working non-stop. Business has been accelerating tremendously. It's starting to catch the eye of the mainstream and of the public. Maybe that's not what they wanted to see. This was a flush now. At the same time, look, a flush you could argue would have been inevitable after 9 weeks of going straight up and moving in a way that freaked a lot of people out. Never seen anything like this. But to your point, gold is no longer overbought as it was since late August, which is a good sign. It hasn't quite yet reached oversold. But what's interesting, silver has also confirmed an uptrend. Both of them have been an uptrend of a 200-day moving average. Both of them continuing up, haven't changed. We haven't seen lower lows yet. But what we see with silver now is that it has already nearly reached its oversold levels. And that's, something very bullish. A technical indicator that should say that maybe the flush in silver has stopped. And in the short term, we should expect it to rebound. We could see a little more weakness in gold because even though both are no longer overbought, silver technically is no longer oversold gold, not quite there yet. So from a technical standpoint, sure, there is some merit in what the mainstream says. The application of how it came about is flawed, and to not bring that up is only telling half a story. And I think that's the part that the mainstream really is divisive about, and why so many people never understand what's happening because they hear what they're saying. And there's logic to it. But if they understood how it was actually implemented, they might look at it with a cross eye. A $250 drop in gold. Yeah, it makes you want to puke, but it doesn't get you scared. It tells me you're getting closer to the point where the physical demand overwhelms the ability of these paper charades, these paper drubbings that we haven't seen for quite some time, to be honest with you. But here it is again. And this one really reeks of desperation, as you can see by it happen in one and only 240,000 days in the normal market. Well, yeah, I mean, I think that is very much the case. I mean, whether it be Tether doing it by the issuance of stablecoins, what they will be doing, and putting the interest that is generated on those treasuries will then go into more treasuries to force rates lower and into commodities like gold to continue to devalue the dollar, like Bitcoin, perhaps to raise the price of Bitcoin to ultra-high levels to pay off the debt. I mean, I do believe that. But at the same time, when we're seeing these massive influx deliveries into the COMEX market, and no one talks about who is actually buying it, I do believe that Secretary Besant is part of it. The Secretary also controls the Exchange Stabilization Fund, and if it were being done for national security and part of a bigger agenda, it wouldn't need to be reported there. You wouldn't need to get congressional approval. I think it is too coincidental when you see Secretary Besant say he wants to take part in a new monetary system, which I argue is the stablecoin passage or the Genius Act, that he wants to remonetize the asset side of the balance sheet. I think it is ironic when you see President Trump say, he who has the gold makes the rules. And as we've talked about at length, both you and I have interviewed Judy and Shelton, and she said he's going to back the back end of the treasury market with gold. My thesis, in essence, is gold's revaluation higher, whether it be organically for a long time. As Luke Groman says, it'll get to 6,000 or 7,000. Interesting that the head guy at Jeffrey says 6,600 is their next target, and then they revalue it from a higher level. It is not to push gold higher to devalue the dollar. And I just think that this is the agenda, whether it be organically or in this case synthetically, through Tether. I think that the idea is to let gold go higher, to devalue the dollar, to make. And that's in essence a good portion of the Mar-a-Lago Accord. Stephen Mirin, who's Trump's advisor, now filling the vacated spot at the Fed to make manufacturing more attractive. And if we take Judy's part, backing the long end of the treasury market with gold, you can bring back manufacturing with no upfront borrowing costs. You have to redeem it in gold in 20 years. Fine. So let it go higher. But in the meantime, you bring back your manufacturing at very, very low, if not zero, upfront borrowing costs, redeemable in gold later. And you use the continual synthetic accumulation of gold through the Genius Act and the treasury purchases. You know, when you spend those stable coins, they're burnt, they're gone. But the interest on the treasury is not Tether, gets to make all that money, and they are required to buy more treasuries to continue to suppress rates and buy those commodities. That's the part that no one's talking about. Buy gold, buy Bitcoin, use Bitcoin to pay off the debt. That's my opinion, and don't know if it's true or not. And use gold to continue to devalue the dollar, to make your selling of products around the world attractive, in essence. You're defaulting on the reserve status Trippen's dilemma. We've talked about Vice President Vance saying that that's exactly what should happen. We should lose it. And the knucklehead, I forget his name, but the knucklehead That was the lead economic advisor to President Biden. The guy that tried to explain how treasuries were created, it was just a joke. I know I forget his name too, right now, but he is a true knucklehead. But he wrote a report called Dethrone King Dollar. And you can link to it in the show that was in the New York Times or the New York Post or Wall Street Journal, one of those New York newspapers where he says it's no longer an advantage to the United States to be the world reserve currency. You're getting this from multiple sources. So yes, I do think ultimately that's where they want it to go. But, as Vince said this morning, by devaluing or debasing the currency, so much so fast, it really doesn't do anything. But make the debt burden a little easier, it